Good morning. With hardly any efforts from the bulls to shore up sentiments, today's start is expected to be slightly flat to steady. Things could get better later on provided the external situation improves. The Eurozone debt issues coupled with the geopolitical tension in the Korean peninsula could cloud the local sentiments. FIIs have taken some money off the table and may remain on the sidelines for a while. It has been rather volatile of late as far as the Indian market is concerned, and the trend might not change much for the remainder of December. And while the Indian market has struggled post-Diwali, the overseas markets seem to have held on well. Wall Street is currently at a 2-year high. Even the European markets have gained this month, notwithstanding the sovereign debt problems. The much-dreaded rate hike from China hasn't materialized either. Back home, the RBI has taken the much-expected pause in the rate tightening while announcing measures to ease the cash crunch. Advanced tax numbers have raised hopes of strong Q3. Inflation seems to have softened but still remains a threat. The EGOM this week on diesel and LPG prices will be an important event to watch out for. Hero Honda will remain in focus in the wake of the formal breakup with Honda. IDFC and United Phosphorus could also be in the spotlight due to the weekend merger and acquisition announcements. Shares of Claris Life Sciences Limited will list today after its IPO just managed to scrape through. Shares of Zealand Limited will list today pursuant to a scheme of arrangement. The Indian markets witnessed a late recovery on Thursday with the Nifty closing above the short-term moving average resistance of 10 DMA and 20 DMA. As the Nifty is oscillating in a broader triangle pattern, a convincing breakout above 6040 is necessary this week in order to accentuate the buying momentum and a sustainable recovery. The FIIs were net sellers of Rs 3.16 billion in the cash segment on Thursday, according to the provisional NSE data. The domestic institutions were net sellers of Rs 960.3 million. The FIIs were net buyers at Rs 11.06 billion in the F&O segment on the same day. Foreign funds were net buyers of Rs 100 million in the cash segment on Wednesday, according to the SEBI website. Foreign exchange reserves dipped $971 million during the week ended the 10th of December. The apex drug regulator, Drugs Controller General of India, has come out with a comprehensive clinical trial inspection program for the country. Advanced corporate tax collections by the top 90 companies in the Mumbai region were up 29% to Rs 165.80 billion for the quarter ended December. Food inflation rose for the fourth week to 9.46% in the week ended the 4th of December. TDSAT has set aside trice notification mandating broadcasters charge from DTH and IPTV providers only up to 35% of rates paid by cable operators for their channels against the earlier practice of 50%. Finance Ministry has approved to provide Rs 3 billion to enhance competitiveness of the domestic capital goods industry. GSM operators added 17.45 million new subscribers in November. The government has set 5th of January as the cut-off date for power projects to shift to a tariff-based competitive bidding regime. Moving on to the recommendations, the technical calls are: a buy on Tata Steel. We recommend high-risk traders to buy the stock in the range of Rs 658 to Rs 662 for the stop loss to be maintained at Rs 648 for a target price of Rs 680. A buy on Cipla. We advise traders to buy the stock above levels of Rs 360 with a stop loss to be maintained at Rs 353 for a target price of Rs 373. The derivative strategies are: long Bajaj Hindustan Limited December future in the range of Rs 111 to Rs 112 for a target price of Rs 116 and a stop loss is to be placed at Rs 108.5. And long BRFL December future in the range of Rs 198 to Rs 200 for a target price of Rs 210 and a stop loss is to be placed at Rs 192. Thank you and have a great day ahead.